I really don't know any other way that you can accumulate this much wealth. And you, quite frankly, there's huge advantages. Obviously, there's tax advantages and things like that. But I mean, just a pure cash flow benefit from multifamily real estate. I mean, it's hard to replace.
Welcome. This is the Lifetime Cash Flow Through Real Estate Investing podcast. This is where you'll learn strategies to help you achieve lifetime financial freedom through real estate investment. Your host, Rod Khleif, has owned over 2,000 homes and apartments, and he brings experts in all aspects of real estate investment and management onto the show. Now, here's your host, Rod Khleif.
Welcome to another edition of How to Build Lifetime Cash Flow Through Real Estate Investing. I'm Rod Khleif, and I'm very glad you're here. And I think once you hear who we're interviewing today, you'll also be very glad you're here. If you're interested in multifamily investing, you don't want to miss this episode. When I personally coach people, I always tell them, model the best people they can find at whatever it is they want to become good at. And finding the best really ties into today's guest. Our guest today is really what I would call a titan of commercial real estate investing, without question one of the best in the business. This gentleman is the CEO of one of the largest real estate management companies in the country. Not just any real estate company. They own and operate a $4.6 billion portfolio. They have over 1,600 employees. They own over 35,000 apartment units and over 21 million square feet of shopping center space. That's 35,000 apartment units. And I know this gentleman's personally been involved in the acquisition of over $7 billion worth of real estate. It's really not often you get an opportunity to hear from someone with this stratospheric level of experience and success. And I'll tell you that I'm not easily intimidated, but this gentleman pushes my intimidation envelope. And before you guys go there, I know some of you are going to be thinking to yourself, well, this guy's done it all. You know, I could never get to that level. And I'm sure he'll be the first to tell you he didn't start out with 35,000 apartment units. He started the same place each of you did. So without further ado, I'll tell you who he is. My guest today is Mr. Albert Berriz. He's CEO of McKinley. Albert, I'm honored and humbled that you're on our show today.
Well, Rod, it's an absolute pleasure. I'm glad to be with you, and I'm glad to be here with everybody in your audience, and I look forward to a great time together.
Awesome. Well, thank you. Maybe we could start out by having you tell us a little bit about your background and how you got started in, multifamily real estate investing.
Yeah, it's a great question. So, I was a banker before I became an owner and operator of real estate, and my partner, he and I have been together since 1982. Started our business in '68, and we've been together a long time. Obviously, almost 34 years together. And he had started the business a few years before that. So, like a lot of bankers do, they often go off and work for clients. And we've had the good fortune of a great partnership and a good many years together, and we've built a good business together. Our business is a privately held, family-owned owner-operator of mostly multifamily housing across the country, and our major concentrations are the Eastern Seaboard, Florida in particular, and the Midwest.
Yeah, I think I follow you on Twitter, and I saw that you've got a couple of projects about to be finished up here, one near me in Tampa. I'm in Sarasota, and I believe you're up in, was it Ann Arbor, correct?
That's true. Even though we are Ann Arbor based, we're the largest multifamily owner operator along the I-4 corridor between Daytona Beach and St. Petersburg Beach. Our biggest concentrations being Orlando and Tampa, of course. And we have been in Central Florida. We've been in Orlando specifically since May of '82. We love it. We're in both markets in a big way, in the Tampa and Orlando market. Daytona to a smaller extent, and on the beach in St. Pete Beach, all the way up to Reddington Beach to a smaller extent. But we love that market. It's always been great for us, and we'll continue to invest in it. We'll be there for the long term.
Yeah, I think there's a lot of potential here. That's why I'm based here, and I've had a lot of success here. I noticed on your Twitter feed you've got, I think it's Iris Flats that's about to be finished, and then Bayshore Flats. I can't remember which was in which city, but can you tell us a little bit about those projects and what you're doing today? Yeah,
absolutely. I mean, we our core business is what I would call larger traditional garden apartments, B+ to B- garden apartments. These are all generational assets. These are buildings that we will never sell. I mean, I personally believe one of the most important ways and one of the most effective ways to create long-term wealth and certainly long-term cash flow generational value is in multifamily real estate. So when you look at our portfolio across Central Florida, you'll see, for example, in the theme park area of Orlando, you'll see more traditional, larger buildings, 300 to 600 units. And we position those buildings, in and around the theme parks. We're in Winter Park, we're down by the airport in Orlando. But we do have two very, what I would call, unique concentrations in downtown Tampa and in downtown Orlando. These are more high end. These are very unique and historic buildings. They're in Hyde Park, which I'm sure you're familiar, which is downtown Tampa. It's a very sought after area. It's a very walkable area. It's a very urban area. It's terrific restaurants. And we have that same concept in downtown Orlando as well, in the neighborhoods in downtown Orlando. So the two properties you referenced, one was in downtown Orlando, Arias Flats, and the other one was Bayshore Flats, which is on Bayshore Boulevard in Hyde Park. And those are two unique concepts. I would call them niche strategies for us. While important for us, and certainly some of the things we're doing now, not as large as our core business, the traditional garden apartment business, but an important addition. And I think it's an important addition in terms of the things that we can offer, the choices that we can offer, across all of the places that we own and operate. And we're glad to be doing it. We're doing a lot more of them. We've got a lot of apartments in Hyde Park, and we've got a lot of apartments in downtown Tampa, and we'll continue that effort.
Oh, that's awesome. I was actually just looking at a 10-unit in Hyde Park myself a couple of weeks ago, and that's a fantastic area. Maybe that ties me into a question I wanted to ask you. I noticed that you like tertiary and secondary markets, and could you maybe speak a little bit to what you look for in a market, if you look for an emerging market, or just the sorts of demographic or location-based information that maybe my listeners could get a benefit from hearing?
Yeah, I look for major employers that never go away. And that, quite frankly, is the single most important thing to look for when you're investing in multifamily. And by the way, when I say multifamily, it could be a duplex.
Sure.
It doesn't have to be what we do. And in fact, my nephew about 7-8 years ago said to me, Uncle, I want to do what you do. And I said, well, let's start with two. And so, one of the advice I always give people is duplexes are great because you can live in one and rent out the other.
Sure.
But my advice is always strongly to focus on employers. You've got a lot of them in Central Florida. I mean, certainly when you look at, one of our biggest concentrations, like I said earlier, is the theme park market. And,
sure.
Employers like Disney, 65,000 employees, Universal, approaching 30,000 employees. You look at all the hotels, you look at the convention business. These are employers. You can't reproduce all the hotel space that there is in Southwest Orlando. You can't reproduce those theme parks. You certainly can't reproduce the entertainment base, and you can't reproduce what is today now, entertainment design, even more than just, the parks, because, we certainly have, companies like world-class companies like ESPN and ABC, all of which are housed out of Orlando today. So, that's
I didn't know that.
Yeah, well, I think the whole Disney enterprise, which includes ESPN and ABC, has gotten much stronger and much more significant presence in Central Florida than it has over the years. But for me, that's an example. Here we're in Ann Arbor, Michigan. Another major example is the University of Michigan, which is a large public university. It's got 45,000 students. It's got almost the same number of employees in the hospital system and in their main university and their graduate school. So when you can buy rental housing in and around those employers, people always got to get up every morning and go to work.
Sure.
And so, my advice is, find that employer that's going to be a magnet for your house or for your duplex or for your fourplex. And,
right.
And, being close by is what we've found to be, our single biggest driver. So your other question was about secondary and tertiary markets. We do that because we don't want to go into markets that, that have, people that we have to compete with. We prefer to be in markets that the barrier for us in terms of the competitive advantage that we have, capital, experience,
sure,
expertise in terms of our people. It's a lot easier for us to compete in a market like Orlando than it would be New York City. Not that we couldn't go into New York City, but there's 10 people like us in New York City. There's a lot less.
Sure. I could go for the low-hanging fruit. No, that makes absolute sense. Circling back to, was it your nephew you said that said he wants to be like you? Can you tell me what advice you might have given him, or what advice you might give an aspiring commercial real estate investor, maybe wanting to buy their first 20, 30, 40-unit building? Is it anything you could suggest for a brand new salesperson out of the gate.
Yeah, I don't think it has to be 20, 30, or 40. In fact, I think I've walked him up. He's getting close to 100 now. And
no kidding.
Over about 7, 8 years. And I think that, I think 2 is okay to start, by the way. And
sure.
1's okay too. My biggest comment for anybody that's listening is get started. So the younger that you are, that you can begin to accumulate real estate and have a cash flow to your benefit, that cumulative effect of owning all of those assets and accumulating all those assets over your lifetime is how to create wealth. And so, we work very hard to own and operate what we have forever, and we never intend to sell. And it's more and more each year. And quite frankly, the cash flow that you gain from these buildings, it's one of the things people don't realize is especially in multifamily. You think of it this way: the person who's renting from you essentially is making your mortgage payment. So imagine a business where the person who's renting from you generates the cash flow to pay off your debt. And imagine that if you take 20 or 30 years, and I'm certainly a lot older, but I started at a younger age, and so if somebody's listening who's in their 20s or 30s or 40s, imagine 20 years from now, where your duplex or your fourplex is paid off because the person paying your rent each month gave you the cash flow to do that. And so think of it that way. I really don't know any other way that you can accumulate this much wealth. And quite frankly, there's huge advantages to come. Obviously, there's tax advantages and things like that. But just a pure cash flow benefit from multifamily real estate. It's hard to replace. And you can say a lot of things about different types of real estate, but people need a roof to live on.
They need a place to live. They need a place to live. Absolutely. Yeah. I read that you're building affordable workplace housing now, and it sounds to me like that's something you're very excited about. Can you speak to that for a moment? Well,
I think it's the same thing. I think from our perspective, when you look at the markets that we operate in, and just to focus in on Central Florida, because that's where you are at, those are markets where the median household income is made up of people that have to get up tomorrow morning and work every single day. So when you talk about workforce housing, which we talk about a lot in our office here, it really is. It's really everybody. It's your aunt. It's your uncle. It's your daughter. There's a lot of people that when you look at their median income, they're getting up tomorrow and going to work. And so people sometimes associate affordable housing with bad things. And we always use the word workforce housing because, quite frankly, people have to work for a living and have to get up tomorrow morning and work and need a good place to live. And so, we've been focusing on different strategies and products that really have been in and around places where there's major employers, and also bringing price points in a place where people can say, well, gee, that makes sense for me to live there, and I can live across the street.
Yeah, some people focus on the high-end market, and I think you found really a niche that'll never go away, and really is probably fairly recession-proof. In fact, that brings me to another question. How did your company deal with 2008 that decimated a lot of people, in fact, pretty much kicked my rear end as well? Can you speak to that a little bit?
Yeah, well, then I guess it's the lessons learned in 82 and 91. Because we almost went out of business in both those times. And 91, literally, I think we were out of business. We weren't smart enough to know it. But we were on fumes, and we had certainly pushed the envelope and probably had expanded too much, and taken some risk. And then of course the floor fell out of that market. It was clearly one of the most devastating.
I remember it.
Declines in U.S. real estate and certainly multifamily real estate. So for us, 2008 was a bunch of older guys who had been through a couple of times before, so we were a little bit more prepared. No
big deal then.
No, it was a big deal. Everything. Right. I'm right now looking at 18, and I tell people around here, everybody puts on war paint because we're going to go into a recession, and I think it's going to be another opportunity. So 8 for us was the first time we've ever done this in our whole career. It took us, candidly, almost 30 some odd years to get there. But 2008 for us was the first time we could be offensive. We bought almost 5,000 units between 2008, late 2008, mostly 2009, and 2013.
Wow.
And we shed some units that we wanted to sell too, but mostly what we did was bought. And so, it was the first time that we got to really sort of take advantage of a down cycle, and we had sort of put a lot of chestnuts away and did everything right. But it was.
So you had a war chest.
Well, it wasn't anything more than 35 years of mistakes finally added up, and the timing worked out. So I don't want to give myself any more credit than that. And it wasn't anything more than that. But what we were able to buy at that time was good for us, and we're happy to have it today.
That's awesome. So winding the clock back even further, can you speak to how, for someone that's new, how you financed your first deals? Not necessarily maybe a duplex, but maybe something more units than that. I mean, was there a magic formula, or was there, can you speak to that a little bit?
Well, we did friends and family, and I'm not sure who else can do that out there, but that's what worked for us. So we literally did friends and family, and so. Owning
lucky.
10% of our first deal in exchange for doing all of the work and having no money in it, and we raised the money from friends and family. I mean, literally friends and family. So,
well, if you only took 10%, that's not a hard deal to do, and that's a great deal for your investors. So, that's and that's what it takes to get started. So, good for you.
It actually was good, and actually the early deals that we did, we don't have any investors anymore, and we don't syndicate anymore. But the early deals that we did for our partners were extraordinary, and we're proud of that, and we're glad we gave them great returns. Today we just do things with our own family money, but I mean, back then it was how we needed to get off the ground, and it worked. And we just cobbled in, $5,000 here and $10,000 there, and all of a sudden we bought a building.
Wow. I know that right now, from what I've read, you've got an incredible culture at your company, and with 1,600 people, and you're very forward focused. I read you've got an incredible social media team and all that. But going back to when you were starting again, can you speak to team a little bit? Who was on your team at that point, and what you feel is essential to have on a team when you're getting going?
Well, I think it's important to be. I think it's we work every day, and so we've never transitioned or transcended to a place that we don't work every day. So we are really truly owner operators. So our business is very flat. I am personally, and all of our people are very connected with our customers, and so we know who our customers are that we're serving. We're very in touch with if they're happy or they're sad. We have a great idea of what they want. So the business is really flat. In terms of who to surround yourself with, of course, we have a lot more people than we did when we started, but we've always had very passionate people. We may have, maybe we didn't know as much as we did today, but we certainly worked very hard. I think probably in our company, even today, and there's no question about it. I mean, we have a second generation running our business today, which is very good. I mean, we brought them in at a very young age, and they're great. Nobody gets away with anything but a lot of hard work. I mean, we work hard. I mean, our business is, I tell people, we rent apartments and we collect rents and we clean toilets for a living, and we're good at it. Our buildings reflect it, and our rents reflect it. But it is not easy. And we are. I don't say I'm an owner of real estate. I say I'm an owner operator of real estate, because I don't want to for a moment let anybody think that that we're in some fancy place here owning it, and we run it. We run it every day, and so. I'm sorry to interrupt. I've listened to people say, buy apartment complexes and hire management companies, and you obviously have taken all of that yourself, and I believe in that myself as well. Could you speak to the difference between the two? Have you ever hired outside management, or have you always done it yourself? I think, well, number one, I've never done it, and number two, we won't do it. I don't know how you can. Well, first of all, it's this is an operating business as well as an investment in real estate. So you've got to be hands-on. You can far outperform your competition by a significant order of magnitude if you're hands-on. I mean, all of these public REITs that we compete with and the markets we compete with, we just eat their lunch. And you look at our rents and spread compared to theirs, and we don't have all these fancy computer systems that tell us what the rent should be on some sort of logarithmic approach to setting rents. we just know what our markets want, and we know what our markets can command in terms of rents, and we set our own rents, and we outperform, and so I think being hands-on, and I think understanding what you do and understanding your people. Like I said, we've been very flat, and our people have been very, very good at operating real estate. The numbers only if you can produce great results, and you can only produce great results if you operate effectively and operate well. So I don't know how delegating that to a manager. Now, a lot of developers do it, because what they do is develop and build. And I get that. I understand that we build too, and that's part of our business. But we don't build to sell. We build to hold. nothing that we own at McKinley will ever be sold. So we just have a different view on it. We just have a different view, and I think in terms of the sort of the ethical relationship with our customers, if we didn't control it ourselves, if we didn't operate it ourselves, we wouldn't know that our customers were happy or sad. And for us, ethically, that's an important thing.
Oh, that's fantastic. I love hearing that. I read that you work 100 hours a week, which is fantastic. How do you find your motivation? I mean, what drives you? If that's, and I know you probably weren't prepared for that question, but I'd be real interested to know.
Well, I'm an immigrant. I should tell you
that.
I wasn't born in this country. I came here as a refugee. I came here with nothing. My father got us here, and he worked until he was 87. And
wow.
He died at 93, and what he told me, because I spent a lot of time with him in those last years, he said the thing he did the most was retiring at 87. He said, son, whatever you do, never stop working. It's the most you can do. And I listened to that pretty closely, and I've never forgotten that advice. I think the United States of America is the greatest country on the planet. They got us here. They let us come in. They let us be here. I'm really proud that in 1965 I became a naturalized U.S. citizen, and I think it's probably of all the plaques on my wall the one I cherish the most. And so it's a big thing. I mean, this is an unusual place. I mean, this is one of the few places on the planet you can come here with nothing and start a business from the ground up and be at a different place. And the U.S. is uniquely different. And so I think immigrant cultures are, sort of.
I couldn't agree with you more.
Yeah.
I couldn't agree with you more. I actually immigrated myself. I remember we came over on a cruise ship when I was 6 years old. I remember my mom crying. That was 1966. That dated me. And my mom crying when she saw the Statue of Liberty, and you do bring a really good work ethic. And I think I read that at least one of your sons works in your business, and I think maybe one of your partner's sons works in your business, and that's got to be very rewarding, I'm sure, having your family there as well, wouldn't you say?
I got 2 sons and a daughter-in-law, and all 3 of them are terrific, and then my partner's son-in-law and my partner's son, so we got a whole bunch of them, and they're all just absolutely marvelous. And we're excited for them to have more kids, so their kids can keep on working here too. So we aren't stopping. We're going to keep on going.
That's fantastic. Now, besides your father, did you have any other mentors as you were getting going in this real estate business?
Yeah, I think my partner Ron Weiser, who remain partners today, he's terrific. He's there's only been 2 CEOs at McKinley. He and I have been the 2 CEOs. He retired in 2001. To become the U.S. ambassador to the Slovak Republic. He's a rare guy. He's 11 years older than I am. I always had him to go to for advice. He had been through it, before I got there in terms of the age difference. And, I strongly recommend anybody that's listening out there, grab a mentor, grab someone you can contact when you're having tough times. And, Ron's been there with me, certainly as my partner, but he's also been with me as a mentor. And I'll tell you, I don't think I could have done it without Ron, and that mentor relationship has been extraordinary.
Oh, that's incredible. What do you consider your greatest professional success so far?
I don't think I had one yet. I'm like,
no. That's the 100 hours a week right there.
Okay. I want to wake up tomorrow and keep on going. I'll get back to you on that one.
Oh, that's incredible. Well, how about your greatest personal success?
My family, for sure, with that question. So I've got
Rich,
2
you
boys.
love voting, and you really you speak highly of your wife. I admire that so much.
She's amazing.
That's awesome. So when you're hiring people, I assume one of the biggest things you look for then is passion.
We can teach you anything. I think passion and that commitment to being extraordinary, that's not something that we can teach you. That's got to come hardwired in your DNA. So if you come with that, we can teach you the apartment business, and we do that often. We love, our hiring strategies. We want to hire somebody who's 25 years old and have them stay with us for a long time, and maybe forever, God willing, if we're lucky, and teach them everything, because that's the best way to get them. So we've got a lot of very hard-working, energetic people who don't know too much, but once they get in here, they learn quickly.
Yeah, keeps you young. Outside. Let me back up for a minute here. Do you have a favorite kind of deal right now?
When you say favorite, you mean favorite kind of apartment investment?
Yes. I'm sorry.
Well, I mean, I think that the things we're doing in downtown Tampa and downtown Orlando are very interesting. We're buying historic buildings, like I said earlier, or very unique buildings in Hyde Park and in downtown Orlando. So I think that's interesting. We're building some very interesting buildings here in Ann Arbor, the workforce housing projects that you were alluding to earlier. And so, I think, right now, candidly, I'm not buying a lot of buildings because I'm staying on the sidelines, and I'm thinking the world's going to come to an end. So I'm looking for that opportunity. And our good friend Sam Zell selling always tells me something that's good for me to not be buying. He's a lot smarter than the rest of us. So
he's made a few good moves in his lifetime.
Oh,
yes.
There's no question. So if he's selling, I'm one thing I've learned is at least who to follow. So
no kidding.
Yeah, he's a good. But anyways, long story short, I do think that we'll see a collapse of some sort. I don't think it'll be as dramatic as 8. I also think it's going to take a little longer than some people think, just because the interest rate environment, what I'll call administered interest rate environment, it's no longer market. It's obviously quantitative easing, whatever word you want to use, is such that I think that's going to delay a serious problem. But you can't continue to buy apartment deals at the prices people are asking for them and expect to make money. And so when you see people like us that aren't buying, that should tell you something.
Right. I know it's so exciting because the rates are so low, but these prices and these cap rates are just insane right now. And I'm really glad to hear someone of your stature say what I've been thinking. Especially in the investment grade stuff, that the world that you play in. What's the most challenging part of being the CEO of that fantastic company you run?
Well, for me, it's staying connected. I mean, I work really hard. I have essentially several CEOs that report to me. My son Albert runs the apartment business. That's the biggest business we've got. And then we've got several others that are like him in those roles. And so, I work hard to go out in the field and be connected with our people and be connected with our customers. I'm always trying to figure out what we have to do next. And sort of my next is 10, 15, 20 years down the road. So the more I'm out there with them, the more I can begin to think about, what is it that we should be doing? What should we be doing differently? And then I'm also looking, across the spectrum of different, challenges. In our case, we have a very conservative balance sheet management approach to our funding our business. All of our loans are 35-year, fully amortizing loans, so those are all pay off over time. So, I'm always just looking at learning. I mean, for me, it's every day is an opportunity to learn, and I try to learn. And if I learn a little bit, then I can make some changes that are favorable. And then if everything's working, then I don't try to make too many changes, because then I can always just screw it up at that point. So
I hope you guys all heard that. Here's a guy that owns and manages 35,000 apartments, and his biggest thing is he's still learning every day. That's called a clue. Well, what's your favorite part of running your company? I mean, what do you enjoy the most?
People.
The people, yeah.
Oh, yeah.
And would you say the answer to the next question? What's the most important part of your job? Would you say the same answer?
Oh, yeah.
Yeah, good for you. That's fantastic. I'd like to ask you to share both one war story when you really got your butt kicked and one victory story that have occurred in your career, and the lessons and takeaways that you took from each of those. I'd be very grateful. I'm sure my listeners would love to hear that.
Well, I made a couple of transactions that almost put us out of business, and those were, life learning changes. I mean, I won't say the number, but it was a large 8-figure number that at the time was meaningful for us. So add those
just
up.
Back then.
Yeah, add those up. You can see that's not an inconsequential number, and losing it in one transaction was was difficult. I mean, it took me a long time to pay that back, if you may, because obviously it's our money and we had to borrow it, and so. It would be. It certainly when you lose that much money, when you lose a very significant amount of money, it could be. It's life.
Can you speak to the actual mistake? I mean, was it? Did you move too quickly? Did you not do all your due diligence? Can you speak to what happened?
Yeah, I think I moved too quickly in combination with taking some risks. That I'm a lot older now, and I'd learned how to cover my risk, and so I'm much better at hedging than I was back then. So I understand how far I can go, how far I can't go, and I can understand what I know and what I don't know. And so I think I'm a lot more educated back then. But I took some significant risk, and they were not good. And so
were they irrational exuberance, or were they, you just had a lot of things going? Was it an ego thing maybe, or was it just
I don't think it was ego.
All of the above.
I don't think it was ego. I think that when you're growing a business, in our case, you can go and we buy buildings, we reposition them, often make major renovations to them, and then go out and get long-term financing. So the risk for us is that period from where we buy the building to where we take the building and then position the rents differently and then take it out to market. The time that we're buying buildings, we're borrowing money from commercial banks, and so that means we're borrowing money personally. We're personally guaranteeing those loans. There was a time when we went too far. I mean, I exceeded our ability to borrow relative to our balance sheet, and so we got caught with our pants down, and so we had to pay back a lot of money. So we didn't have the liquidity that we have today, and so it was a near catastrophic event. We didn't go out of business, but I mean, we were there. I mean, we were at the edge, and we were probably a little bit past the edge. If it wasn't, I'm glad we weren't as smart as we were today, because we figured out that we were past the edge. But we came back, and I'm not sure how. And fortunately, time cures things sometimes. And in our case, I always tell people this business is a slow baked business, not a microwave business. So sometimes time heals. And in our case, it did do that for us.
I like to call those seminars.
Oh God, yes.
Some are more expensive seminars than others. Well, how about a victory story? What's like a feather in your cap? Just an extraordinary deal you did.
I don't think it's a deal. I think it's our company. I think our company. When I look at our company today, and I look at what we've built, and we built it incrementally. By the way, we built it over time. With our people over time, and with our investments in the real estate that we own over time. And so the cumulative effect of what we did over that time is something I'm very proud of. I mean, I think I look back today, and I think that sometimes it's just a very rewarding feeling to see that we've been able to do what we've done.
Well, you're very blessed, and it's very, very impressive. And what I've read about your company and the culture is very impressive. Well, we're getting near the end of the show, and I was hoping that maybe we could leave my listeners with maybe one little golden nugget of advice. If there was one thing you'd tell somebody that's in the business or thinking about getting in the business, maybe a trait or an emotion or something, anything that a bit of advice that you could give them, what would it be?
Work hard and never give up. I mean, there are people out there that you think you work hard, they're working harder. And you're gonna come up against every single obstacle and every single difficulty, and then just never give up. And so if you are just obsessive about never giving up, and you just work, you'll win.
Albert, this has been awesome. Thank you so much for your very, very valuable time, and I'll enjoy following your career, and hopefully we can stay in touch, and you're doing some great things, and thank you.
Rod, my pleasure. Listen, call anytime. It's great to hear your voice, and we're glad you're down there in sunny Florida and enjoying the warm weather.
All right. Thanks. You be well. Thanks again. Bye-bye.
Thank you for listening to the Lifetime Cash Flow Through Real Estate Investing podcast. If you've enjoyed the show, please subscribe, and then take a moment to visit iTunes and leave a 5-star rating and review. For more resources to connect with us further, please visit our website at lifetimecashflowpodcast.com. Tune in next week for our next show.